take that same approach at Titan and bring that to crypto. Basically, we're building for traders who want that edge, that precision, and that performance on that side. We envision like a future where everything in finance is on-chain, and we want to be the trader's platform of choice when they're trading any asset on-chain there. So, as some of you may know, Titan is a meta aggregator on Solana. So what is a meta aggregator? So just going to work up the layers of the liquidity stack on Solana. The first are DEXs, right? These guys are the guys that provide liquidity. They can be AMMs like Radium, Orca on that side, or they can be prop AMMs like we discussed, like a Humidify, like a SoFi. Basically, these are guys that are acting like market makers. One layer above that are DEX aggregators. So DEX aggregators go search through the entire liquidity, like hundreds and thousands and not millions of pools, and find the best price for a certain token pair on that side. Titan also has its own DEX aggregator, which is very, very performant. It does win around 80% of the time. But one level above that is the MetaDEX aggregator. On the MetaDEX aggregator side of things, it aggregates aggregators in order to find the best price, because you don't know if an aggregator is specialized towards a special, like a particular asset class, like meme coins or blue chip assets. Basically, we just simulate everything, and you bring in all the quotes at the same time, simulate everything on the same block, and then you see which quote provides the best while taking into account historical slippage and all those estimates on that side. So what's really exciting about on-chain DeFi, I know a lot of speakers have been mentioning this, but low latency chains really led by Solana has made it increasingly cheap and effective to trade on-chain. This shift from passive to active liquidity, provisioning with these market makers, shifting from constant product, concentrated liquidity pools over to prop AMMs, where these are active market making strategies, has really enabled Solana to offer better prices on Binance, better prices on chain rather than on Binance, after you take into account all the fees. The power of this is operating on one unified ledger, which really brings forward its composability, because now this means that the prop AMMs can just focus on market making instead of appealing to the front end user. And really this has been driven by really the growth of aggregators on that side, as well as the prop AMMs. So if we were to take a parallel in how order flow really operates in TradFi, you have traders placing orders with brokerages, let's say a Schwab or a Robinhood on that side. Basically, after that, the brokerage sends their orders over to the exchanges, and you have to get the NBBO price like we were mentioning before. This is an aggregate of all the exchanges that exist in the US, as well as dark pools that may exist, and it's serviced by market makers who individually make the markets for every single stock, for example. The parallels in DeFi are very familiar, as the market structure has kept evolving on that side. Traders send their trades to a meta aggregator such as Titan, which consolidates and finds the best price among a list of DEX aggregators, whether that's Titan, whether that's OKX, whether that's Jupiter on that side. And really, they're finding best price through access to all these market makers, let's say like a SoFi, a Humidify, a ZeroFi on that side, and really gain the best price. Now, you can see like the parallels here. The prop AMMs are operating exactly like market makers. The DEX aggregator, you think about it, the job of an order book or a centralized exchange is to find the best price, top of the book quotes. The DEX aggregator also does the same thing, and if you can break down the algorithm, you can also find the second best, third best, fourth best. So you can basically find portions of the liquidity layer. And then the meta aggregator is acting like a brokerage layer in terms of interfacing with the best user and trying to find the best quotes for all. So the other thing I think people should know about is that the vast majority of trading, especially on chain, is toxic order flow. By that, we mean traders that have an edge, mainly arbitrage traders going through APIs that are really trying to exploit market makers and trying to take advantage of them. So some best estimates, really only the routers would probably know how much of the order flow is toxic and non-toxic. The best estimates that we've worked together with OKX is that around 90 to 95% of all the order flow that you see from aggregators are toxic order flow. Now, with Titan's order flow, this is completely switched. We've really targeted these front-end traders, GUI traders, as well as platforms that have non-toxic order flow. With that, I think we've been pretty successful at doing that, and around 80% of our order flow is actually non-toxic, which is totally rare in the space, and I think something that we're proud of. These users are very, very sticky and are unlikely to change after they've been secured on that front. So just a couple things. Titan went into private beta at the end of March. It went into full public launch in mid-September, and the statistics have been pretty mind-blowing on that side. With the routing side of things, there's been an 80% plus win rate with Titan's algorithm, combined with OKX on that side. So this gets all of the routes that exist out there on that front. We've seen over $5 billion in volume processed through the front end alone, as well as more than $5 million saved for users in terms of trading edge. We had around 130,000 different wallets connect, and all of this with very low slippage. we're down to single basis point slippage just due to the simulation infrastructure that we've really invented and pioneered on this. Now, in terms of the trading edge, some users may say that like 5 basis points, 10 basis points, that's so little, who cares? But in terms of like, if you're a pro trader, right, which is exactly our target market, you're doing 100 trades compounded, you're compounded on that side. 10 basis points is 10.5% of your portfolio. So this is a significant pricing advantage that people should be aware of on that front. In addition, like we've really focused on making sure that our GUI, our retail traders are sticking on that front, and we just can consistently update the user interfaces to make it a more seamless trading experience. As you can see here, you have your classic swap interface box, but then you also have the quotes moving extremely fast because we want to be extremely transparent in which provider is giving you the best prices and which provider is giving you, which routes are actually operating efficiently. So you can see the market makers involved. In addition, you also have the ticker tape, and then we also have the prime mode, which really abstracts away all the slippage settings, all the gap priority fees, gas ending, so that this feels more and more like a TradFi experience there. So, a lot of people ask us, what's the secret sauce on this portion? And really, a lot of it has to deal with our algorithmic advancements. As we can see here, there's a lot of our routing algorithm, even after you exclude ties, has been winning quite extensively against other players in the space. It is around 80% plus win rate while keeping slippage low. The important thing is that with our simulation infrastructure and how we've been really monitoring the, execution quality, we managed to push slippage for all routers, not just Titans, but also for Jupiters, also for OKX, to single basis point slippage. And here, as you can see, it's like anywhere from 0 to 1.5 basis points on that front. Now, the approach that we've been taking is completely different. We've basically gone down to nano precision route allocation. So in terms of splitting, a lot of other algorithms split in 1% chunks or maybe basis point level chunks. We do track 2 to 3 times more liquidity sources, and this is a result of us using a type of algorithmic approach called convex optimization. Most other routing algorithms use classical pathfinding on that side. It's something that's taught to every software engineer, and that's why we believe why it's highly used. But we believe it's a wrong type of algorithm for financial markets. You can kind of imagine that type of algorithm like this. Like if you have 100 guys and you try to send them down through a maze to find an end path, every time they run to a dead end, they just come back and keep sending them through additional routes. Now you can put some shortcuts involved in there, but ultimately what happens is that you aren't able to scale this algorithm especially well. You can't get down to lower precision routes without scaling your hardware horizontally, and you can't really include more and more pools in there. You're really capped by it just based on the limitations of the algorithm. Convex optimization, on the other hand, really just allows you to pinpoint that exact route that you think is perfect on that side. Like the most optimal route, and then you can really just drop it in and figure out the perfect split. So that's how I've got to this nano precision route allocation here. I think the other thing that we found extremely important in DeFi is the composability. I think that most people have been talking about this, right? So really this dismantling of this reconciliation industrial complex that goes along. If I want to make a trade in stocks, in bonds, in FX, I gotta make one trade, I gotta see it facilitate through, I gotta wait for T+1 at this stage for everything to be settled on that front. But what's the promise of really DeFi is that I can put this all in one atomic transaction. So connecting all of DeFi, not just AMMs, into one composable ledger to find the best price is really the promise of Titan. One of the most interesting integrations that we've done 2 weeks ago was the Hilo integration. Basically, Hilo had an issue where there was very thin liquidity traded in the secondary markets, but they could mint at will on the primary side. So basically, what our routing algorithm did was it took into account what the prices were trading at the secondary market and what the prices were to directly mint or redeem on the primary market on that side. And it can make an ideal allocation on that side. And this is a, integration that's really unique to Titan on that side. No other router has really been able to do this type of thing. And it's really been shown that once you start moving in size, let's say $100,000, $150,000 trade, that the secondary market will punish you by taking a 75% haircut. On Titan, you just get the maximum available on liquidity that's available either on the primary market or in the secondary market on that side. So moving all of this into one composable atomic transaction where the user doesn't have to think about, am I minting? Should I check how much the mints are? Should I check how much the secondary markets are? That is really eliminated once you start going through Titan. And with this, it's the vision of one interconnected ledger is really possible, made possible through Titan, having the most Prop AM integrations as well as the most mint redeem integrations as well. So it's really connecting the entire ecosystem. And if you think about the future, tokenized stocks, bonds, FX, all of that type of product is like what we're leading to in order to be tradable transact in one transaction instead of like, let's say I'm waiting for my Argentine peso to convert into into a US Treasury on that side. I don't want to go through multiple legs. Going through one atomic transaction is really the promise here on that side. And when we roll this out, these unique integrations that's only available to us, we do help our partners out in order to give this access to the entire ecosystem. So API connectivity has been going to partners and traders. It's rolling out now. Guys like Loopscale, guys like Exponent that really rely on like looping Borrow Lens or looping with these high-low assets or any other assets that may be already integrated, like let's say a DeFi carrier one. They will just all go through the Titan API and they don't have to start worrying about building out a separate connection to check if the mint redeem or the primary market is better than the secondary market on that side. And really, like, when we think about what's next at Titan, we want to continue driving that, that influence into making sure our order flow is really non-toxic in order to like make our market makers really happy as well as get better prices. To that end, we're really pushing out API and partnerships with the entire ecosystem because as once you get integrated, it's really sticky. It's really hard for these protocols to go to a non-core portion of their platform and reintegrate a different swap platform on that side. So that's really our core driver there. We're also going to be building out different verticals to help optimize on it because we'll be building out limit orders, DCA, RFQ, and you can think about this as like the classic Robinhood Citadel example. You can have payment for order flow details on that side, but really attracting that retail user, really attracting non-toxic order flow is how you can monetize on different verticals. So you can start offering like structured products. You can take a look at different products you can aggregate on that side. And really the core driver of what's really built the Robinhood empire and brokerages in general is that key insight into how do you obtain this non-toxic order flow. Because toxic order flow can be switches quickly and dramatically the second there's a better price or a better API out there. So yeah.